FBN Quest Manufacturing Purchasing Managers Index for Nigeria rose from 52.3 index points in August to 54.8 index points in September. FBN Quest also noted that the swings in Nigeria's headline PMI reading have been less sharp than in China and in other advanced economies because Nigerian manufacturing produces for the domestic market and so is little affected by the collapse in external demand. Chinwe Egwim, an economist at FBN Quest Merchant Bank, joins me now to talk us through that report. Chinwe, thank you so much for your time today. So can you just speak to what is driving the recovery we're seeing in the PMI?
Yeah, thanks, Wally. As you said, the headline reading rose from 52.3 to 54.8 in September. Now, 4 of the 5 sub-indices recorded increases. The increases recorded can be attributed to a steady improvement in demand due to the easing of lockdowns across states. The governor of the country's commercial hub, Lagos, had relaxed public gathering regulations, increasing the permissible capacity from about 20 to 50 individuals at any given period. In addition, over the past 2 weeks, social clubs were given the go-ahead to reopen with the condition they must a provision certificate according to stimulating demand, both the uptick and new orders. However, we do note that prior to the recent disruption to consumption patterns due to the COVID-19 and recession, consumer pockets had been squeezed and are yet to be rebuilt. Now, regarding FX liquidity, as at end September, the FX rate in the IME window was 308 naira US.
Chinwe, can you speak to how the operating environment has changed for the manufacturing sector in general, and how do you see things moving forward for manufacturers, given the relatively slow, moderate recovery we're seeing in economic activity?
Well, operating challenges still persist. You know, power shortages continue a major challenge for manufacturers. The high cost of power has forced scores of industrial plants across the country to shut down. And the cost of self-generation weighs heavily on not just businesses, but also household pockets. ₦1 trillion is spent annually on importing, fueling, and maintaining generators by businesses across the country. As for the employment sub-index, that's something I think I need to talk about the question. It increased considerably to 52 in September. But however, the no change responses accounted for 96% of the total. Now, the rise in this reading is linked to an increased workload across companies but we assume that these roles are contract-based. According to the 3rd edition of the Impact Manufacturing Report released by the MDS, this was with support from the World Bank, the easing of lockdown restrictions has had the desired effect of getting many Nigerians back to work or back to the position pre-COVID, but a sizable improvement nonetheless. I think the study found that 81% of the 1,950 households surveyed were working, compared with just 43% recorded in March, April. If they may speak about affordable credit, it has worsened during this pandemic. Now, based on data from the Bureau of Statistics, loans extended by deposit money banks totaled about 18.8 trillion in the second quarter of this year, compared with 18.4 trillion in the previous quarter. Now, that's a 2% Q-on-Q increase, which is not surprising given the cautious and this. The second largest recipient of the second quarter of the year was the manufacturing sector, that accounted for about 52%. The sector has benefited from various financial interventions mainly driven by the CBN. Now, I think as of September, total disbursements from the CBN's intervention in the wake of the COVID-19 pandemic amounted to about 3.5 trillion. And this includes the 216 billion naira allocated to the real sector. Under the real sector fund, I believe at least 57 manufacturing projects have been funded. So operational challenges still persist. We're seeing interventions. Recovery is slow, but yeah, that's what I have to say about that.